To get into your first property, you've got to do the hard yards. You've got to
Yeah.
save. And there's no other way to do that.
Yep. So doubling in like 3 years.
In the next year, we want to get to 50 properties. So that's 10 more in this year. That site, we were able to subdivide into 3 lots. All right. One lot had a 1,000-meter site on it, which we built 4 townhouses. The second lot, it was kind of in the corner, so we built a duplex on that. Now the third lot, we shifted the original house to that third lot and converted it into a dual occupancy.
Hello, everyone, and welcome to another episode of Passive Income Doctor. Today we have not one, but 2 special guests, Han and AIlinh, from kind of humble beginnings to now having success in business and also a big property portfolio, 40 plus properties at last count. Welcome, guys, to the show.
Yeah, thanks for having us, Daniel.
Thank you, Daniel, for us joining this.
So let's start. What do you guys do kind of, day to day, if there is such thing as an average day?
Average day. So I'm actually an optometrist. Okay, so I'm sort of running between operating an optometry business. Probably work there 2-3 times a week. And in between, we sort of run the buyer's agents business as well. Now, in terms of a day to day, we've got young family, so we wake up, get the kids ready to school for school, and then we try to prioritize our health. So we go to the gym for an hour, right? Then we start looking for properties, I guess. In terms of the buyer's agents, I would look at my saved searches, the alerts, see what's out there at the moment. Then I'll have a look at the realestate.com website just to search what's available, and in between that, we still got
just emails and just
Yeah.
little things to follow up, like messages, getting back to the clients, telling them what's happening, just the day-to-day as a buyer's agent. So just the compliance side of things too,
Yeah.
making sure that everything is
running smoothly.
organized,
Organised.
that dates are actually input in our calendars,
Yeah.
that there's alerts.
Settlement is on time. So I read building and pest report as well. So sometimes we jump on online and just explain the report to our clients, especially when there's issues. Do a bit of research.
Also, I think we just do a bit of our financials, because what happens is we would like to know our cash flow. I think, as you know, Daniel, in any business, cash flow is the key.
Yep.
So running a business means that you've got to know where your position's at, because we're also investors ourselves. We are consistently buying property, so getting loans is another stuff we need to do.
Exactly.
And
exactly.
making sure that tax is up to scratch.
Yep. And also catching up with our clients as well. And
just making
talking to agents as well. That's a big part of the day.
And also making sure that the clients know their portfolio is up and running. Like sometimes we do touch base with clients, telling them this is what your portfolio is worth within a year, and then they would say we're happy to go again. So just guiding them through to see if they're ready to go again.
Yep. And before you know it, it's after school. So that's the rest of the day. Yeah.
Yep. And is there kind of any particular, highlight or favorite part of the day, as you said, dealing with lots of different roles and tasks?
Look, I find actually finding the deal, negotiating the deal and putting together something to offer to the clients, I think that's exciting. And having actually get accepted for the deal, that's also exciting as well. So and knowing that we've bought something of good value. So that's the best part of being a BA, I guess.
I think the other best bit about the BA is that you've done something right, because you don't always get feedbacks, or you don't get rewards straight away, because properties don't just happen and grow overnight. So what happens is sometimes it takes a little bit longer, like a year or so, or 6 months, that you see that there is capital growth, and you're like, wow, I can't believe we've done that.
We've done the right thing.
Yes.
Yeah, awesome. And I guess, as you said, optometry business, buyer's agency business, and also your own property portfolio, like, any kind of tips on how you kind of, or do you have any framework in how you schedule the day? Is it kind of ad hoc, whatever fire's coming in, you have to put out, or do you have like, certain hours that you block off working
Yeah,
on,
look,
each
honestly,
business or?
we're struggling with it. We're quite terrible. Okay. So I think ad hoc is probably the word. So I mean, we divide our attention mainly with the optometry business, buyer's agent, and obviously family and exercise as well. In terms of structure, for example, Monday I'm at the optometry, Friday, Saturday I'm at optometry. So the Tuesday, Wednesday, Thursday, that's when I'm really focused into buyer's agent. So more searching, more research, more looking at articles. And when I'm in optometry as well, sometimes I get a quite bit of a spell, and then so I get to call some agents also. Yeah.
Yeah, awesome.
With AIlinh, I guess our role is very different. I'm more the technical, the research, the negotiation part of the business, whereas AIlinh is more the humanitarian side. So she deals with the clients.
Client facing, yeah.
Yeah, client facing, deals with the broker, deals with sometimes with the accountant,
Property manager.
property managers.
Just to make sure that the deal flows through.
Yeah.
And not just that, just to make sure that everything's on top of things. Because sometimes if you miss something, things get delayed and things get misread.
Yeah.
So it's about communication. So
I guess it's good that we've got this partnership, and we all each have our own sort of set of skills. So it definitely does help in terms of running the business. Yeah.
And with clients and, kind of, delays with finance or delays with settlement, etc., is that kind of, how much is that, the client's responsibility, or how much, do you kind of help in that regards as well? And,
Now
and do you use, I don't know, Google Calendar or some other software? I know there's like
We
game
definitely do
plans
have
and things like that. Yep.
Google Calendar, and I think we're getting to a stage where we do need a CRM now. And with every deal, there's always nothing runs smoothly. Like there's always just something comes out of the left field, and then you just have to put out that fire. But we try to, coming up to say a building pairs, we definitely call up, and that's AIlinh's job. Make sure that things are done. When the report comes in, we make sure that gets done. So
also the negotiation of the
yes.
Just that there is like defaults or things that needs to be done. So Han does all that. So he makes sure that things get done before we settle. So I mean, as you know yourself, as an investor, nothing always goes
according to plan. There's always
things that you need to do at the last minute, because banks are not always ready, as you know that too. And coming to Easter and Christmas, you know how that works. Things always gets delayed, regardless if your stuff is on time. Sometimes you have to push it. It's about explaining. I think the communication is the key factor.
Yeah.
Like telling the agent, this is what's happening, the bank's delayed, or telling the client going, well, I've spoken to your broker saying that they can't get access to the property. It's just once they know what's going on, I think things kind of like work itself out.
Yeah, I think the communication is a big part. So we recently signed up a contract, and the agent has already sent us sort of the contract, but because our client is very busy and overseas, so we just have to, reply to the agent and say, look, the buyer is still very keen, all right, but it's not because we're holding off. Tell your seller that, he's just a little bit busy, and we're going to get that done later tonight. So it's just about the communication.
And I think for ourselves as investors, we want to be communicated in a timely manner, where when something's important, you want to know the answers straight away. So I can understand where they're coming from. So I feel it when I don't get communicated. I get annoyed too.
Yeah. So I guess with us, we believe in the service. So we do actually set up a WhatsApp group chat. Okay. So at any time of the day, 7 days a week, okay, they can post a question for us, our clients, and then we'll try and answer it or get that done. And if we can't get it done straight away, we'll go, look, I'll follow it up tomorrow. So that's the communication. That's the sort of extent that we go through in order to get things running smoothly, and we hopefully settle in time.
And not just that, I think we also expect that from you when we know that it's an urgent matter. So instead of just WhatsApping, I'll try to call you.
Yes,
If I can
it's
get
really
through,
urgent, yes.
can't get through to you, I'll send you a text saying, hey, this is an urgent matter. I need you to touch base with me as soon as
Need you
possible.
to sign that contract.
Because you got somebody else on the other end, as nervous as you. So it's good to have that communication and also the expectation from your clients too.
Yeah, I think, good customer service and good communication, is probably key to any business, including the
100%.
optometry, and later this episode I'll ask about kind of the passion and transition to buyer's agency as well. So I think let's go back in time to kind of childhood and growing up, because I think a lot of times the backstory helps explain kind of the drive and where we are today. So
100%.
growing up, where did you grow up, and what was discussions like around money and investing and saving growing up?
All right. So, we grew up in the Southwest, low socioeconomic, immigrated to Australia when I was 8. Now, growing up, I guess my dad had only one advice for me. That was, work hard, study hard, and get a good paying job. And that's exactly what I did. But I do remember that, growing up, there was a lot of argument around finance or around the lack of finance. So, for me, I made a decision very early to say, I don't want to have that argument. I don't want to have that issue when I'm growing up. So, finance, I've always aimed to be financially independent.
I think for me it was more about, I think my mum has always been a saver. So she always says to me, once you get your first pay, save majority, spend less. And the way her thought was, just save your way through. So really, in terms of finance, I think it's
we didn't get too much investment advice, put it that way. Yeah.
It wasn't the right way, but it gives you a head start, because at least you're not overspending, because to get into your first property, you've got to do the hard yards, you've got to save, and there's no other way to do that except for work your way through, save your money, and then get that money as a deposit and then start investing. But I think it was great that we both had the passion for investing afterwards. Yes.
Yeah. Were your parents like employees or business owners themselves, or?
Employees. Yeah.
Employees. So obviously the mindset is completely different to a business owner. Their thought was save as much as you can, spend as less as you can, and make sure that you maybe down the track buy a property.
Yep. I don't think there was any advice on
where to buy or what to do with your
build
money.
a business or
it was just
save
for a rainy day.
Yeah, so that was something that we had to figure out ourselves, definitely.
Yeah. So I guess, from kind of then high school to university and career path, do you want to touch on kind of a career path and then also later business?
Yeah, sure. Look, so I did exactly that. I worked hard, studied hard, and got a decent HSC mark. So I applied for medicine. Okay, I knew I was good in maths and science-based sort of subjects. So I applied for medicine, applied for dentistry, and then I got into optometry, which to me was kind of like a blessing in disguise. Because my brother got into medicine, okay, and he's now a surgeon. He's making big money, but the amount of effort that I see him go through and the hard work and the studying, I didn't think that was for me. You got to be so passionate about it and motivated. And I think optometry for me offered me that time freedom. And it gave me a lot of opportunity to diversify my thinking outside of just being employed. Okay, so one of the early books I remember reading was Rich Dad, Poor Dad. Yeah. And also his subsequent book, which is the Cash Flow Quadrant. So reading that, I understood what it meant to have good debt versus bad debt. And I understand his philosophy of, either you're employed, you're self-employed, or you have investment income, or you're an entrepreneur. Okay. So I chose the path of having a business, which we started the optometry business. And the whole idea was when you make money from either your job or your business, then you try to divert some of that income into investing. And you try and generate a return on that investing, and you reinvest that return. And over time, you sort of start building up that passive income. Okay. So yeah, so that was sort of my background in optometry.
Well, I did econ finance and I work in a corporate job. Then I guess once we got married, we opened the optometry, and so it was good that I was working in the optometry, and then we started investing. So it gave me a lot more time to understand a lot more about how to invest, because we wanted to learn it for ourselves and apply the principle. So once we got to the point where we did understand it and understand a lot more, it got a lot bit more complex, because you had to know a lot more than just buying properties. You had to understand how accounting works. You have to understand how trust structure works, or the legal side. Then you got
finance aspect of it.
Yes, and you got to understand the broking side. So
the banking side.
So in other words, buying a property is not just buying a property. It's you've got to wear many hats. So it's pretty much running a business on its own. So to me, when I look at my portfolio, I treat it as a business, because what happens is it's a cash flow. You've got to have good cash flow. You've got to understand where you're negative. You've got to understand where you're positive. You've got to know where the money comes in and out.
Yes.
Because if you don't understand those details, how are you going to create a portfolio? How are you going to grow? So I think Han's given me a lot of opportunity because of the business, and we were able to grow the portfolio because there was a lot of income coming through the business, and we were able to buy assets and obtain those assets. Yes.
Yeah. So it sounds like even from a younger age, maybe high school age, was keen to kind of get ahead financially, and I guess saw property as like a vehicle. Was there any particular reason why property, or?
Look, when second year out of uni, right? So I knew I was on a high income. I knew I needed some sort of tax offset. Okay, so that was the only reason why I got into property. Now, I didn't know much about it. So a family friend actually helped me into my first property, which was good. And from there, because I took that one step, so my whole aim was to depreciate, get some tax offset from my high income. But that was all it took. One good property. And to tell you about that property, right? It was 4 hours south of Sydney.
Yep, Bateman's Bay, is that right?
Yeah. Even past Bateman's Bay.
Oh, right.
There anyway.
Yep.
So at that time, the price of the property was 115,000. It was rented for 160, and the property was about 5 years old. So the cost to build that property was 90K. So when you do a very quick sort of back of the napkin sort of calculation, the rent almost covered for the interest rates. Okay. So it's kind of like a cash positive, but a tax negative situation, because I got depreciation for the building. So that was all I needed to sort of step in. Now, as that property grew in value, I sort of saw the potential, and I started learning more about properties, reading magazines, reading books, investment books. I got into shares and the Australian Property Magazine. I read, almost every copy of that. So that's how I got into property. And once that property increased in value, because I saw the potential, then I subsequently refinanced it and continue to sort of buy properties. Okay. So, I had sort of an idea that I wanted to be investing, but no major sort of ideas, except just no major goals, except just to go one step at a time. I had this outrageous thought that wouldn't it be nice if I was to locum different parts of Australia and be able to buy properties in different parts of Australia. That was it. Okay. So then I sort of bought in Cairns, okay, because I was locuming there, and I bought in Canberra because I was working there as well, and we just.
What year did you buy the first property?
1999.
Yeah.
That was when I was 24.
Yeah, nice. 24
Now, that
years old,
same
buying
property I
first
still
property.
have, yeah, that same property I still have, and it's probably worth 900,000 now, and we've
Mm.
topped
Topped
that
it
up
up.
several times
Yes.
so that we can actually move and purchase more. Yeah.
Yeah. And how did the family friend kind of influence? Was it because they were quite successful and encouraged you to do it, or they were buying in, near Bateman's Bay, or like how
Yeah,
did you
yeah.
get into?
Yeah, she was a real estate agent, and later on she did become a buyer's agent as well. But she loved real estate as well, and she saw the opportunity down there, and I just followed her.
Yeah. Oh, so she bought there herself and then kind of
Yes,
told you about it. Okay.
told me
Yeah.
about it. Yeah,
Yeah.
and
Interesting.
it does help when you're starting early. It does help to have that mentor,
The
just to
right
guide you, the
guidance.
right mentor. Yeah. One of the best things that I did was not to buy a off the plan unit, okay? Because back in 2004, when all my sort of circle of friends were sort of getting into properties as well, because we were all in our mid-20s, and you know, off the plan units was a big thing back then, okay? So I went to this sales
Auction
event,
thing.
okay, to buy properties in Ryde, okay? So so I called up my mentor and said, this sounds good. What do you think? And she goes, no, don't do it, okay? So it's very good that I had that sort of mentorship and I didn't buy, whereas all my circle of friends that I know did buy,
Yeah.
and they really got burnt.
Yeah. So Sydney off the plan in kind of early 2000s, I think from memory, had gone through quite a strong run, isn't it? Kind of in that
Early
early
year 2000
2000s.
to 2004, but 2004 was pretty much the peak of the Sydney market. So you bought then, and
Yeah.
it's still in 2006 or
Yeah.
2005,
Yeah.
you would be yeah.
Yeah.
So
Well,
USD section.
just briefly, like when you say some of the friends that unfortunately bought and got burnt, like
Yeah.
what happened? Is it like a shortfall valuation, or they still hold on to it and it's worth less, or like?
Look, so some have sold out a couple of years later because they realized that this is negatively geared 30K.
Wow. And this is back in the day, 30K.
Yeah,
Yeah.
and also the value of property hasn't increased. Now some have held on for 10 years and they may still have it or they might have sold recently. But can you think about holding an asset for 10 years and every year you're losing 20 to 30K,
Yeah.
and units might have increased 100K, 200K over the 10 years, but it's not sufficient to cover the
Yeah.
loss.
Yeah.
And not just that, I think it's like, you kind of unfold a lot more stories like recently how the reason why they don't like property is because they got
Yeah,
burnt.
yeah.
And it's kind of interesting when you kind of understand the philosophy of someone's mindset is, they've got into property at a very early age in their 20s, didn't know anything better. They bought the wrong property.
Wrong property at the wrong timing.
They got burnt dramatically, and then they
Never
go,
to go back into
I
it
will
again.
never touch property ever
Yeah,
again.
yeah.
And to today, so we're in our 40s now. So they're like, don't talk to me about properties. I will never touch property ever again. And it's hard to give that mind shift when you've actually got burnt once.
Yeah. And look, to think about it another way, there's an opportunity cost of holding a non-performing asset as well.
Yes.
Okay, because not only is it mentally draining for you, secondly, you could have bought in another location and made much more money. Okay, so the fact that I didn't buy in 2004, what I did was I started reading up once again the investment property magazine, and back then Perth was outperforming and it was the hotspot. Okay. So instead of buying a off the plan 1 or 2 bedroom unit in Ryde, I bought 4 properties in Perth instead. Okay. Now, so back in 2004, prices were roughly, I was targeting a particular price range because the rental return made sense in that price range. So it's targeting 150. So I bought 4 properties, 150,000 each. Okay. And the rent was roughly about 220, maybe 250, I forget now. Okay. So the rent,
So that's like a 7-8% yield or something, gross yield.
So it kind of covered for the interest rates. And if it was negative, it wasn't negative by that much. Okay. So you could afford to hold on to them.
Do you remember how much interest rates were back then?
Oh, I
Oh,
reckon
okay.
hybrid. Oh,
Geez.
I reckon it'll be
That's
about
okay.
Oh, I
six or
kind of know. Yeah, I
seven.
kind of know. It started increasing.
Yep.
So it would be about that 6 or 7%, because when it reaches that percent, then Sydney market was, people were struggling to afford it. So Sydney market was flat. So it would be around that 6 or 7%. Okay. That's just a guess from now. Okay. But so 2007, I ended up selling all 4 properties, okay, at an average price of 335,000
Yep. So doubling in like 3 years.
in 3 years. Yep. So I made almost 700,000 in 3 years, okay, compared to somebody who's bought the wrong property at the wrong timing and lost 2,000 every year,
Mm.
3 years. Okay, so there's an opportunity cost if you actually do make a mistake. Yeah, as AIlinh said, not only are you financially worse off, psychologically you're also worse.
Mm. Yeah.
Okay.
Yeah. I think, yeah, shouldn't buy just for negative gearing. A lot of doctors on the online forums and also talking to me as well, like, because I run some kind of small community
Yes.
meetups,
Yes.
either in
Yes.
person and virtually as well, and have
Yes.
lots of stories of doctors
Well, it's
being suckered into, off the plan apartments or
yeah.
house
Look,
and land packages in areas that are,
yeah.
at risk of being oversupplied and yeah, some have been burnt holding a off the plan apartment in
Correct.
Sydney. Obviously
Yeah,
Sydney's where I'm
100%.
based, holding it for 10 years, selling it for the same price or slightly less. And yeah, if you do the maths, it's not just break even, it's
Exactly.
loss of stamp duty, loss of selling agent fees, then the negative cash flow during the years you hold.
Yeah.
And yeah, the opportunity cost if you
Yeah.
could get into the right markets
Yeah.
and then exit and get into another market, exit.
So
The
Daniel,
wealth could be like $1 million,
yeah,
difference.
you're doing a great job, because I do see the same thing as what you're seeing as well. A lot of people get burnt buying either house and land packages or off the plan units. Um, not I think it's because not only do they not know any better, but it's just an easy way out, if you know what I mean. It's disguised as being low maintenance, tax offset. I'm on a high income, so I want to reduce my tax. But reducing your tax, really what it means is you're spending $1 to get 40 cents back. Okay. So that's not negative gearing, is that's how it works, right? So it's not really an ideal situation, especially when you're doing that long term. So we are passionate
Yeah.
about helping clients avoid that mistake, just like you're trying to spread the word of don't do that. Okay. So
I think it's also, there's a lot of sales gimmicks around that, which makes it very attractive to a lot of people because one, the low maintenance, as a doctor, you don't have much time in a day. So they think, there's not much maintenance. I want something new. And it's also that proud trophy.
yes, the trophy property. Look, I can show this to my friend, my family. It's nice.
It's
It's
great.
designed by this certain person, and
Yes.
yeah,
But the property we might buy might not look as pretty, but they're the
ugly duckling actually.
but they do give us a better return. And that's what's more important. Do you want good return or do you want the pretty one? Pretty one always costs you more.
Yeah, it's more of an emotional decision rather than a logical numbers decision if you're buying the sort of brand new
Yeah, I think and newer built property doesn't necessarily mean, less maintenance, there's been lots of apartments with
dodgy
defects.
building,
Yeah,
yes.
dodgy defects. I think there's he's all over social media. I think Site Inspections is the name, like where
Oh,
he's a building inspector and
The Melbourne building inspector
showing all the kind
defects,
of
yes.
dodgy construction. I think Sydney, Melbourne, everywhere really. And then also as well, if you're buying off the plan, they're having to spend so much money on marketing, glossy brochures, and all these. There could be, accountants, mortgage brokers getting, 50K commission to sell their client effectively,
Look,
one of
100%
these, off the plan opportunities in quotation marks,
opportunities, yeah. So
and unfortunately, sometimes, doctors are so time poor that, so I think that's one thing I did, when I went through medical school, uni days and junior doctors, even though it was busy as a doctor, I still took the effort to educate myself because I thought this is very important to set myself up financially. Yeah, lots of stories of
You're
doctors being burnt, and that's why I kind of
you're a rare
started
breed,
this
Daniel.
podcast.
Not many doctors think your way, I tell you, because look, they're so focused onto their own occupation, they just don't have time to step outside of their daily life to look deeper into what's actually going on around them. You fall into this trap. Well, what I say is some people are just too busy to become wealthy.
Mm,
You know what I mean? Okay. Yes, you can be busy working in your day-to-day job. Okay. But if you don't actually transfer that income into some hard assets, you'll never become wealthy. Okay. So you're spending as much as you earn, and you're not putting aside something to invest in hard assets. And it's just
yeah. And what about optometry and working in healthcare? Like, what made like were your colleagues or people that went to optometry school, did they also kind of financially educate themselves, or were they just, as you said, just working hard, doing locums?
No, I don't look. Look, I think I'm safe to say that I'm on a path which is different to a lot of optometrists as well, similar to doctors. They're so busy working, by the time they go home, I can't be bothered looking at, real estate or investing, or, I'm just so time poor. But I don't think I have many optometry friends who have built up a significant portfolio.
I think it's normal.
Yeah.
Any profession, like the reason why I say that's because there's a lot of profession, even your accountant.
IT, accountants, yeah.
Accountants have the same thing where they go, why would you want to buy positive gear when you can do negative gear? And it doesn't make sense to me. Why did you want to sell your property? Because it's going to be couple
Yep.
tax.
Yep. The worst advice we had is one of our clients, right? They bought a property in a mining area, okay, Kalgoorlie. Okay?
Yes.
It's generating 10-11% rental yield, and they're positively geared. So they bought that a couple of years ago, and the accountant advised them, it's positively geared. Why didn't you sell it? Otherwise, you'd be paying more tax. Okay. And then, so they did end up selling it. So once we found
So they
out,
sold it, is it?
they sold it.
They sold it.
Yeah.
Based
Well, I
on the
guess it's
change in
done well
price.
over the last few years, isn't it?
Yeah. I mean, the capital growth wise, there wasn't too much growth. It did grow,
Okay.
maybe 20-30K, but they were positively geared. And because they were positively geared, I think it's not a criticism for accountants, right? But I do find that they the way that we judge an accountant of whether they're a good accountant or a bad accountant is how much tax return we get back. So
Right.
it's upon the clients that we judge them based on that. So their advice to us is reduce your tax.
Yep.
Right? Because that's how I see myself as being a good accountant. By
Yeah.
reducing
Their value. Yeah. Yep.
yeah, so that's their value. So because you're making a positive geared property, making money, you're going to have to pay tax on that. So therefore,
Yeah.
they're going, you're paying tax. I'm going to be called a shit accountant. So you have to sell it, right? Buy a negative geared apartment. So so it just doesn't work. Then what happened is we got them into two properties, both houses on a decent sized land, and they're negatively they're negatively geared at the moment, but the capital growth would far outweigh the negative gearing that they would suffer for the short term. Yeah.
And I think they've done pretty well with these two properties too, because we know that the market has moved. And not just that, because they also had a brother who came to us first. So he ended up buying a property through us, and he's done significantly very well because it's been a year now. So it's probably grown about 150.
Yeah.
About 150,000. Whereas when she did her own research and she bought a positive geared, yes, she did get she did get positive geared, but her capital growth within that year wasn't a lot. It was only about 20K. Yeah. So in the end, just imagine the same amount of money, same amount of time, the difference between one property where you buy it and the other property, one only makes 20,000 in capital growth, the other's 150. Which one would you
Yeah.
choose?
Yeah. 7 times the amount.
Capital growth first.
So the property that went up, well done on purchasing that one, 150K. Like, what was the purchase price they bought it for?
Now that was bought at 330 or 350. I can't remember now. There
And
was
when was this?
there were two in Bunbury
Oh, yeah. And in what year? What year?
about a year and a half ago.
About a year and a half.
Okay,
yeah.
so that's end
It
of
settled,
2023.
yes,
Probably, yes.
it settled in December, put it that way.
Yeah.
But you remember the
Yes,
settlement
I
date?
do. One of the missing
December
time.
23 then. There you go.
Yeah. So there you go,
So-
kind of 50% growth in like
Yes.
a year or year and a bit. Yep. Amazing.
And it was a pretty good purchase because it was a very unique purchase, to be honest with you,
Yep.
because you can
So it was two houses side by side. Okay. And the problem back then was they were selling together. Okay. As a two houses together. And they were asking 700,000. Now back then, every other house was selling for 330. So everybody's budget was about 330. So nobody was looking at that higher end. Okay. So I was able to go in and say, these are two friends. They both want to get property. How about you get one each? Okay. So when you split a $700,000 purchase into two lots, 250, it makes it a lot more feasible for people to buy it. Okay. So it was both each on a 1,000-meter block. There's potential to subdivide, keeping the house and maybe put a few more units at the back of it because it's zoned to do that. Okay. So intrinsically, if you buy a property with high land content and a not so new house on it, then the capital value would appreciate far more because of the land content. Okay.
Yeah.
So that was the property that we bought for them. It's done pretty well so
It
far.
does significantly well. And not just that, also the rental yield was not bad too at that time too. I think it was about 440 for each property. So it would have increased since then too.
Yeah.
Purchase price of what was it again?
Roughly
330,
350, yeah.
350,000, and then now it's about 500.
450, maybe going to 500 now because that area has been increasing $50 or $100 a year.
Yeah.
So,
And what would the rent be now?
roughly about 500, I would say.
Yep.
Haven't caught up to find out exactly, but the average house around that area are in the late fours and the
So was it two houses on two separate blocks, or was it two houses on
separate
one?
blocks.
Oh, okay. And
Two separate
for some
blocks.
reason they were trying to sell it in
Together.
one line. Okay.
In one
Correct,
bit,
yes.
Which is a bit okay. So maybe the owner just wanted it.
Yeah, they wanted
Easy
to
transaction or something.
Yeah, exactly. But you see, sometimes you need the experience to be able to see past what the situation is, and that's why I say it's quite exciting to create that deal to make that negotiation possible because nobody was looking at that price range. Everybody was looking at the lower price range, and because I saw the opportunities on two lots, it could be sold to two separate people because in the end, when you get a loan, it's two lots, so you need two contracts and you need two separate loans anyway. So why can't we sell it to two separate people?
Because it's in two titles anyway.
It's on two titles.
Two titles, two lots.
Which makes it easier too.
So and because of that, we were able to negotiate hard because nobody was looking at it. It was on the market for, I don't know, 2-3 months.
Yep.
And it's just having the experience to see that situation and sort of identify it and be able to sort of purchase it that way. Yeah.
Yeah, that's an awesome case study. In when you were growing your portfolio in the early days, besides the magazines and books, etc., was there anything else you did, like any courses?
Yeah.
And how did you kind of improve self-education?
Yeah, 100%. In the early 2000s, I did do a property course. It was through Peter Span, I remember. Okay, he's no longer available, but so from there, I was able to sort of learn about capital uplift. So his whole idea for his course was buy a rundown property, okay, at a good price, do a cosmetic renovation on it, okay, and increase the rent, increase the value. So therefore, you can go back to the bank and draw down their value and go again. Okay, he called it the leapfrogging strategy, which is, That's just what he called it. But doing that allows you to move a lot quicker. So by doing that course, I understood all that. And I did do a sort of a small sort of project on my own, because after I've learned that, I did a renovation on a townhouse, and that did increase in value. And then I was able to draw down and buy other properties as well. But, in my mid-20s and early 20s, I was more into, more going out than to be really focused. So I let that probably side of things sort of be on the background. But at the same time, because I was already in the market, it had been growing up slowly, even without me being consciously aware of it or looking at it. Yeah.
Yeah. So in hindsight, had you not done that renovation, that sweat equity,
Yeah.
like, do you think it would have been a better return?
I wouldn't have been able to move as quickly. Yeah. Okay. Because by having that increase in equity, I'm able to draw down on it and then subsequently buy those properties in WA, just based on the drawdown. So I didn't really need to save up for a deposit.
Yeah. And what was lending like back in the day? Was it, anecdotally a bit easier, right? In terms of now there's like debt to income ratios and, servicing calculators and, 3% buffer.
This was the rule back in 2004, right? When on the height of the sort of property boom, if you had a 20% deposit, no bank will refuse you a loan. Okay. So if you had a 20% deposit, you can get finance.
Did they have to look at your income pay slips?
Look, I didn't really care. I was talking to a broker and he said, this is what he said to me. And I said, yep, good. Give me 4 loans and I'm going to buy 4 properties. So basically, if your value of your property is so much, you can top it up to 20%. They won't refuse it. And using that money, you can go on and buy more properties and only borrow 80%. Okay. And then the rent will cover for itself. But back then, because the lending policy was a lot easier, but obviously not now. Okay. Then you can just continue on going and going and going, as long as the property prices increase.
Yep.
Okay. So that was the lending policy back then. But obviously nowadays it's different. You got to jump through a lot more hoops. Serviceability, LVR ratios, and all this.
Debt ratios,
APRO rules. Okay.
There's a lot more hoops, which makes it's also
it's a good thing too, actually.
It just means that that there's a lot of restrictions, which means there's not going to be like a lot of cowboys out there doing the wrong things, which means it's better for us also. But it does make it harder for investors like ourselves to get more finance. But I guess it's about how else can we get finance?
Yeah. And talking about sort of education, I mean, over the years we've spend a lot of money on education. So when it was time to sort of get into the commercial space, we went and did a course on commercial to buy commercial real estate. And when it was, and we had the idea of doing developments as well. And before we did the development, before we actually jumped into it, we did a course on how to develop properties as well. Okay.
Developing commercial or developing residential? Residential. Oh.
So we were doing, splitter blocks. We're doing townhouse developments, duplex developments. So we did a course on that. Now, the idea is very simple, right? When you engage something that costs you a lot of money, hundreds of thousands of dollars, potentially you can make hundreds of thousands of dollars of mistakes. Okay, so if you actually don't know what you're doing, the loss that you can make can be devastating. So the cost to do a seminar, okay, is minuscule compared to the money that you can potentially lose. Right? And that's why just studying about it, engaging. I mean, you can find out everything by yourself, but if you actually paid somebody and download all their knowledge and get everything all done in 4 days, okay, you're saving a lot of time, and you're getting the right information, and you're getting it quickly as well, and you can have the confidence to move forward rather than you being unsure about things. So I've always sort of believed in sort of educating ourselves, just so that we know what we're doing and just avoiding mistakes.
I think it makes it quicker too. So think about it, like what they're learning is they've got to go through a lot of mistakes before they can actually teach you something.
Yeah.
And once they kind of got that blueprint, they kind of give it to you, and then you kind of go, okay, this is what they've done, this is how they've done it. So it's more like a recipe.
Yeah.
And once you got that recipe, you kind of follow that structure, and then you do it. And once you do it once, it gets easier each time.
Yeah, and investing, like everything else, like whether it's business or share investing or property investing, it's a lot to do with psychology as well, right? Yes, you can go out and do it yourself, but are you dealing with the psychology of it? Okay, do you have the confidence? Do you still have that fear? Okay, whether it's business, stocks, properties, but if you're actually learning from somebody who, who's done it already, then a lot of that fear and that negative thinking has somewhat been mitigated. So you have a little bit more confidence to move forward.
Yeah. So I guess that course that you did on developing, did you then end up doing some
Yes.
developing, and then
Yes.
it did
Yes.
but I think nowadays, oh yeah,
So
I
should
think
we
you
talk
said you're
about
still
that
planning
development?
you're still planning on some development. But
Yeah,
I know some
definitely.
people become like a full-time developer, as like their day job, while other people see it as a bit too risky. Like, what's your thought process about buying and holding,
Yep.
versus developing, flipping?
Okay, cool. I'll tell you about the first real big development that we did. Back in 2014, we bought a 2,000-meter site. Okay, it was 360,000 in Logan, okay, of places. Okay. So with that site, we were able to subdivide into 3 lots. All right. One lot had a 1,000-meter site on it, which we built 4 townhouses. The second lot, it was kind of in the corner, so we built a duplex on that. Now, the third lot, we shifted the original house to that third lot and converted it into a dual occupancy property. Okay, so that one development, we got 4 townhouses, 2 duplexes, 2 what do you call dual? So we got 8 rentals out of it. Yeah, and then at one stage, that one development was giving us a cash flow of 90K a year.
A positive cash flow?
Positive cash flow.
Yeah, wow.
Minus everything. Yeah. So when you say is it worth it, you can literally retire on the one development. Okay. Now the trick is not to sell it. Okay. Now, because if we had sold it at that time, Brisbane wasn't doing very well. We would have probably made a little bit of money. Okay. But because we held it and it went through this COVID boom period, and we still hold it, we're still holding it. The value, almost doubled since then.
I think the reason we kept it is also it was still very positive cash flow,
Yeah.
and we had a massive depreciation because it's all
brand new.
So those were the boxes we ticked because it serviced itself, it serviced our other property.
Yeah.
So to us, that one development did change, like
a whole sort of
portfolio.
Yeah. Yeah.
So it only takes one stuff to make everything work.
To balance a lot of things out.
Yes.
Yeah.
So up to that point, was your overall portfolio a bit like negative cash flow?
Yes.
Yes.
Yes. I would say yes. Yeah.
Because interest rate
but then at that time we did have several properties that had granny flats on it as well. So we did. Well, our journey really started off with granny flats. Yeah. So we've had properties in Blacktown that increased in value that we bought earlier on in 2010. Because it
2010.
We were able to draw down, we were able to refinance and get that equity out. And with that equity, we built granny flats.
Yep.
Okay. And then that increased our serviceability. Okay. And that increased our rental income. Look, I got to look back. I'm not sure at that stage whether we were positive or negative, but we wouldn't have been negative that much. Okay. But we bought in areas that I believe had capital growth potential. Yeah.
Yep.
So,
and I think the serviceability was pretty good.
Yep.
But I think that one project made a
big difference.
Like a huge difference, because I think our target at that time was to get $100,000 in passive income, which we were able to achieve.
Yeah.
Afterwards. Yeah.
Yeah. Well, and this was 2004. Did you say in Brisbane, Logan?
2014.
Oh, 2014. Okay. Yep. Yeah. Yeah, I
2014.
guess construction costs would have been cheaper back then as well. How did you coordinate, developing and kind of building
Look, we
interstate
were flying
based in
there
Sydney?
at least once a month, if not once every couple of weeks.
Wow.
Like maybe like a 1 day trip or 2 or 3
Sometimes
days.
it'd be ridiculous. Yeah, we wake up at 4 a.m, catch a plane, go out there for a day, catch a plane back at 6, and then go to work the next day.
Wow.
So those were the real hard yards sort of period. Yeah.
When you think about it now, like, fast forward 10 years, like you think about what I've done or what we both have done,
Yeah.
it's kind of worth it because at the time you're thinking, my goodness, I'm waking up at 4 a.m. Is this really worth the trip? Until everything kind of
Comes together.
Yeah, comes together. It makes a massive difference.
Yeah.
And as you know, probably you don't see it happening within the next 2 weeks or 3 weeks. It takes a year to,
Yep.
for us, it's about, once everything was completed, which was about 3 years,
Yep.
then we saw the income coming through. And that made a big difference. We're like, wow, we
Right.
can't believe we did it.
Yeah. So with properties, right, just like when you're starting a business, the hard yard is always at the beginning, okay? A lot of people can't get over that first step of how hard is this going to be, looking for a property, building a business, studying about shares and, the economy. But once you pass that initial stage of hard yards, property is one of those set and forget, really. Okay, there's not too much things you need to do after that initial period for you to maintain that investment. Okay, so a lot of people say, oh, I don't want to deal with issues with tenants and repairs and maintenance. It's just an email and a phone call, really. It takes 5 minutes, 10 minutes of your time, once or twice a year, really. The tap's leaking. Can you get somebody to fix it? Done. It's not too much of an issue once you get comfortable with the idea that, it's maintenance is going to happen. It's all about how much you value your money. If you're really tight on money and say, look, I want 10 quotes, or that's an exaggeration. I want 3 quotes. I want to know if I'm being ripped off, But if you're someone who says, look, for my time, if I got 3 quotes and the difference between them is $50, why get 3 quotes? Just I trust my property manager. They've done a good job so far. Just go ahead and do it, right? You don't need to spend too much mental space on deciding on just a very simple thing. Those people that think that it's a big problem maintaining a property or dealing with maintenance issue are the ones that spend too much mental space thinking about the issue.
The small
things.
The small things, because don't forget, there's bigger pictures, because because yourself, you're a doctor. It's very busy. So you want to spend more time making that money, because you think about it, can you imagine spending 2-3 hours, thinking about a leaking tap? It's $50. Wouldn't that be better just to make that $50 anyway?
Yeah, just work an extra half an hour, right? Yeah, but that's the thing, right? A lot of people dwell on the issue and dwell on the problem, but if you can see the bigger picture, right? Bigger picture thinking. If that property was going to make me 100 grand in a year or 2 years' time, why am I so worried about a $100 repair or $200 repair or $500 repair, right? If you see the profit at the end, then all those little costs becomes insignificant.
Yeah.
You know what I mean? So for us, it's always been the bigger picture is this, the maintenance issue is minuscule, just deal with it. Okay, and that's why AIlinh's been able to manage 40 odd properties, because all we're doing is just managing the manager, really.
I mean, I do get odd questions. Like I did get one last week, which was really unusual, which was they wanted an external PowerPoint, and the cost to do that external PowerPoint was $700. And I had to call the agent and said, what kind of PowerPoint are they getting? $700. This is a bit ridiculous. I'm happy to pay for the extended cord.
Extension cord. We can't do that.
because it didn't make sense. Because so I said to the agent, look, I think that's a bit ridiculous. I'm not happy to do that. I mean, there are things that I do look at and go, oh, this doesn't make sense, or this.
Yeah, I guess that comes with experience, right? When a repair job comes back and there's a quote on it, over time you sort of realize, yep, that's a decent quote. And over time you realize, nah, I've been ripped off. So you sort of challenge what needs to be challenged And those that you think is fair value, you just get it done.
Or you
I think we
say,
did end up getting it.
no, we
approved.
didn't, because I thought it was just ridiculous for just an external PowerPoint.
Yeah. I'm interested about that 2014 development project. Did you
Yes.
say in the end it took 3 years?
Because by start to finish,
Yes,
because
start to
we had to subdivide the land, then we had to get the drawing, then we had to do the civil works. After the civil works was getting
Get a quote from the builder.
builders also. So there are
The actual
steps.
build itself was maybe 8 months or
The build was very quick,
Yeah.
about 6 to 7 months.
Yeah.
It was actually getting council approval because
Yeah.
you're not just doing one thing, you're doing civil works plus your subdivision. So that takes time. So once you get your tile, then you can build. So that will take about a year. So submission for the plans, then you got your civil, and then
2 or 3 years.
yeah.
At
So
least
it was about 3 years to complete.
And during that time, I think you had, is it like slight income from one house on the
Yes, we had to shift the house. So there was a period of time where we didn't have any income. So once we shifted the house, renovate the place, we started getting
Yeah,
income.
we
So
started.
that helped us service our loan also.
Yeah. How did you go about, getting a loan? It sounds a bit complex. Was it easy or hard to get construction loan?
that's
Did you
where
have to
you,
pull out heaps of
Now,
equity, cash? Did you have to contribute a
we
lot
did
of
have to
cash?
contribute a bit of what we call hurt money, and we did have to contribute that. But we end up having 2 separate banks. One bank to finance the 4 townhouses, and another bank to finance the duplex. And it was easy because it was on 2 separate titles. So you just have to go to approach 2
Right.
banks. Yeah. But had it been on one title and you're building 6, then it would have been a little bit more difficult, because then it's considered a commercial, and they'll go, oh, we need pre-sales and this and that. So the way we did it was, ended up being.
And the banks for construction loan, do they contribute like 70% of the construction loan or something like that?
Let's see. No, they actually contribute the whole lot. The reason was because we did the civil works for it. So the civil works and
you paid for the civil works in
we
cash.
paid for the civil works. So that means the land was encumbered, which means unencumbered. So which means nobody holds so the bank we didn't have any loans for that, which means it made it easier for us to actually go, hey, we've got land. This is our end product.
So when they finance a construction, they look at the end value. All right. If the end value is so much, and the build cost covers that 80% LVR, then they'll lend you the whole 80%.
But I think our loan was, so at that time we had, it's called a bridging loan, because what happens is it's only a 2-year loan to build. And once you complete the build, then you've got to go back and find a proper bank to service the loan for 30 years. So it was a bit of understanding brokers and who can do the job at that time, because obviously policy has changed since then. Things don't work the way they do now. So it was good, because it was a massive learning curve, and having the right broker to help you made a big difference too.
So did you say you bought the property, the land in cash, and therefore unencumbered, and therefore you could get construction loan, or?
No, so what happens was we bought the property and we had a loan on it, but because we subdivided, that land is classified as unencumbered because it's got its own title.
The subdivided land where you built the 4 townhouses, that was unencumbered.
Correct, because it's got its own title. So it was a little bit complex, because you do
it is quite a complex deal. It's complex enough just to explain it. So once you have one, you've got a loan on the big block. So we subdivide into 3, but we put the old house on one of the lots. Now, then you transfer all that loan onto that one lot. Yeah. If you know what I mean.
So you have to follow the process.
Those 2 other lots are unencumbered.
Yeah. And then once you subdivided, though, I guess you start having to pay 3 sets of council rates, I'm guessing?
Yes. You have to.
Yes.
Because as soon as the subdivision happens, it's classified its own title. So the value of that land is worth something for the council.
Yeah, and maybe land tax as well. Yeah.
100%.
So I guess, I don't know if you remember the numbers. Like what was the purchase price? And, it sounds like the construction would have been a fair bit. And then holding costs, it sounds like would have been a fair bit in terms of council rates, interest rates. And then
think we ever
Wha-
sat down
Um,
and fully crunched the numbers, so we kind of know
roughly.
a rough idea. Now, after the project,
so what did you buy for back in 2014?
360.
Oh, wow. Yep.
Yeah.
I think the renovation was about 200 for the house.
Yep.
But then the good thing was the house service itself, the whole loan of the land.
Because there was a dual op that we converted. Yeah.
Yep.
So that was a good move for what we did. And
Okay. So that really helped with the holding costs,
Yes.
offset by that
100%.
old house and granny flat. Yep.
Correct.
Yes.
Yep.
Yes.
And then
Were they
after-
rented out separate? No, back then I think you
Yes.
you could rent it out. Oh, because it's not City of Brisbane, is it?
No,
it's
no.
Yeah, Logan. Yeah.
And then afterwards, I think we actually put some money into the construction, which was about 2 to 300,000 just to subdivide that land.
Yep.
Because it was hard to get a loan so it was more like equity we had, and we just put
Yes.
it into that.
Yeah. But I think when we figured it out, if we had sold everything
back
back
then,
then, our profit would have only been, I don't know, 150 to
it wasn't much.
It wasn't very much.
Okay. Well, it sounds like your
Well,
all-in costs maybe 800K or maybe a bit less than that, and then you could have sold the 4 townhouses for 250K
Yeah,
ish.
even if we did sell it, the whole profit for the whole project wouldn't be that much.
In much, yeah.
Yeah. So so that's why we decided, look, it's going to be a cash flow play, and
Yep.
it's going to be a long-term hold, and so that's what it became. Yeah.
Yeah. What would be worth now for? I mean, it's a bit hard, isn't it? 4 townhouses, a pair of duplexes, and then the old house.
We do have the numbers. So each townhouse, if you were to sell it separately, well, one's going to be worth a bit more. So at the moment, Logan, for a normal house, you're looking at about 700 to 750. So a townhouse, which is a 4-bedroom, you're looking at maybe 6, I reckon. We're going to go through the numbers.
Let me have a look at my
Spreadsheet.
Spreadsheet. Yeah.
Go up.
AIlinh Street.
Yes.
That's the granny flat, isn't it? Yep.
Yeah, so you have to look at 30.
Are the townhouses separately titled or
They're all no,
strata?
they're not stratted.
We
Oh, they're
did-
not strata. Oh,
no.
right.
No, because if we're keeping the whole lot. I don't believe in paying somebody to
Oh,
manage
yeah.
own property.
Yeah. So it's all owned in one line or
It's
one title, whatever you call it.
Correct,
Yeah.
correct. And I think it made more sense because we knew we were going to be holding it. Unless you're selling it individually, then we'll consider straddling the townhouse. Few minutes.
Yeah, we're guesstimating 4.3 million.
Yeah. Wow. For the 4 townhouses plus the pair of duplexes
dual
plus the house and granny.
the house.
Yeah. Yeah. Nice. So kind of
Yeah.
So-
maybe 800K, and then it's about 11 years from 800K to about 4.3 mil. Is
It's
it?
a bit more than 800K. Yeah.
Yeah.
The bill cost.
There's a bill cost as well.
Bill
Yeah.
costs, don't forget.
Oh yeah. What was the bill cost
we're
back
not
then?
The bill cost was about 1.2 million.
Mm.
Yeah.
And then there was concrete.
For 4 townhouses and a pair of duplex.
Yes,
Yeah, wow.
it sounds unrealistic now, isn't it?
Yeah. So 1.2. Okay, so maybe 2 mil,
Yeah, 2
basically
mil.
more than double
A bit
in
more
about
That's
11
right,
years.
that's right,
Yeah,
yeah.
nice.
So that's why it's worthwhile holding. So, I mean, moving forward, you mentioned, should you sell or should you keep? I think the thing to do really is to sell some so that you can move forward to your next project, and then at the same time keep some, because if you don't keep it, you never take advantage of that capital growth over time.
Yep.
If you continue to selling, you're just continually working, if you know what I mean, and you don't really hold any real assets in the end.
Mm.
Okay, so so moving forward, I mean, in the last couple of years, we've bought a lot of property that's on large subdivision sites. So we're going to develop a lot of them, and perhaps sell a few and keep a few, and just move forward from there.
Yeah. Shifting gears a bit, how do you juggle kind of investing, business, and then, as you said, raising young family, kids at the same time? Myself, I don't have kids, but like, a lot of my listeners are kind of new parents or have a young family. How do you
don't
kind
have
of
kids, you should move forward hard. You should keep going forward, because once you have kids, the dynamics change, obviously. Yeah. So I mean, we juggle it okay, but you know, we do prioritize our health and our family. And now moving forward, it's going to be hard to juggle the optometry business and the buyer's agents, because the buyer's agent space is sort of getting a lot busier. And I feel like I'm not focused enough to justify keeping both. So moving forward, I'm probably going to sell my optometry business. Okay. And then maybe focus completely on the buyer's agent space.
Plus, I think we want to spend a bit more time with our kids, because they're actually in their teens. So before you know, they're going to be in uni and they're going to have their own lives. So I think for us, I think family is quite important, and taking that advantage right now, because I think we've actually.
So financially, we're kind of doing okay, right? I mean, we don't have massive goals of building up a big buyer's agent business. We're just content in a way of doing what we're doing now. So, you know, we want to focus on sort of the business itself growing organically, and by referrals and by, you know, repeated business.
And I think it's also about having that niche kind of clientele. The reason was because then you can actually concentrate a lot more on your clientele, because I find that once you get too big or too many employees, it kind of gets lost in translations, and you're not giving you that attentive service as what we would like to give. Yes.
Yeah. And with the kids
So
side
at the
of things,
moment, we're juggling it poorly. So
no, and thanks for the honesty.
We do sell the optometry. We'll, you know,
not as bad as you think it is. It's not too bad.
Yeah.
You know, sometimes it's hard because, as you know, if you're service based, you get a rush of clients, and you get a period where you don't have a lot of clients. There was one stage where we had 10 clients to fulfill. All right, 10 clients to buy properties for, and that was a little bit stressful. And as we sort of worked and closing down the deal, and there was 1 week where we had 8 settlements. Was that right? Or 2 weeks where we had 8 settlements. So we had to sort of, was very busy at that time. But now it's sort of getting to a stage where we can sort of handle it, and we try not to take on too many clients as well. Okay, some clients that goes, can you do this for a little bit cheaper? This other buyer's agent is giving you know, $500 gift vouchers. No.
I think because I think
we try to be selective with our clients as well. Yeah,
because I think the quality of service which we give compared to a lot of other buyers agents out there, I mean, we talk after hours. We do things, you know, things that for you that you probably don't realize that we do. So there is a lot of behind the scene as a buyer's agent, and I think that, and we don't want to substitute on that quality of service.
Yeah. And I guess it must be inspiring then for your kids as well, right? Like seeing you guys kind of grow a business and then also grow a property portfolio as well.
Look, I'm
you know,
sure
a lot
they're
of
absorbing in some sort of way, but they never show it.
Okay.
So, I mean, we tell them about properties, about investing, about this and that, and they'll go, oh, yeah. But I'm sure at the back of their mind, they are absorbing it.
Yep.
Except that, you know, they don't show it, or they don't show interest in it at the moment.
I think they're a little bit young to understand all this, but I think it's probably in the background where they will understand it a little bit more once they're a little bit older. So hopefully they will follow our footstep and start investing at, you know, at a younger age than what we did. Well, I started a lot later.
Well, one thing is a lot of professionals and doctors on some of the forums, they, you know, a bit unsure on how to educate their kids about money and finances, and then also bigger picture about, you know, like, you know, inheritances, but then also some people think, you know, if you give them too much money, you take away their drive and ambition and their life. You know, what are you guys' kind of general thoughts and how you kind of instill, you know, financial habits or learnings for your kids?
We told them, look,
we want you to save for your deposit, and we'll put in as much as you've got, so that it gives them a bit of a drive. Because I think the most important thing for our kids is taking that responsibility. Because once you have
go on.
Once you have a mortgage, you kind of understand the in and out, and you know the urgencies of certain things. If you don't get that done, you don't get it done.
Yeah. Look, I 100% agree with you. I mean, we grew up with that drive to succeed because of the background that we came from, but they don't have that drive because everything's been given to them. So I mean, for them to be interested in sort of taking the path that we're taking, I think it's important that we sort of start them off investing early as well. So as soon as they can legally sort of buy a property, we're probably going to help them out with buying a property. Not because you think about it, for them to be interested in something, they need to have
Their foot in the
something.
door.
They need to have a foot in the door.
Yeah.
You trying to explain to them what's a negative gearing, what's tax, what's depreciation, it
What
goes like that,
equity?
yeah. How do you manage your property managers? It just goes like that.
Yeah.
So if they do have a property and they're able to manage it, and and they see that it grows in value, I think they will be motivated. Give them a set of share portfolios, and then they'll get them into thinking about shares as well.
Yeah. And for you, kind of, did you do both shares, ETFs, and property, or did you kind of, talking about the psychology, maybe some
Yes.
people had a
Yes.
bad experience with shares and therefore they go, I'm into
Yes.
property.
Property is 100% better than shares.
No, not financial advice,
You know
by the
why?
way, for anyone.
You know why? Because this is my experience, right? I've lost money in shares. Okay. So I've made money in property. So
Was this like 2008 financial
no,
crisis
I've been trading since early 2000s. Yeah, and I've been starting, stopping.
like margin
Look,
loans
I
on
do
shares
I
or?
do shares, I do option trading, writing options, covered calls. Look, I've done it all. But I just don't think my excuse for losing money is I just don't think I'm mature enough, okay, to hold something for the long term, or to ride the emotional roller coaster of the up and down, and making the wrong decision when you're on that emotion. So I don't think I'm mature enough. So until the day that I feel like I'm emotionally stable enough, in terms of investing in shares, that's probably when I'll go into it. But I mean, having said that, I mean, my ultimate goal is to be able to travel all around the world and have a laptop and just trade the stock.
Okay.
Yeah.
Right.
All right. So
Sell all the properties and just
not all
Not
of them.
of
Not all of
no.
them.
Because the property,
Enough of them.
the properties is enough to to cover up
Yeah.
the cost of his loss.
Yes.
Yeah.
That's because of my loss. Hopefully, I'll make a profit next time.
Right, that day.
fund your hobby of trading.
Yeah. So it
Yeah.
is. Yeah. So I've got to get serious. I've got to consider it as a business. So yeah. So that's the ultimate dream. And I mean, I've got the framework. I just need the stability, if you know what I mean.
And I think that the only problem about shares is it takes up so much of your time.
It takes up a lot of time.
Way too much time compared
Yeah.
to property. Whereas
Yeah.
property is you
Yeah.
buy it, you set, and you forget.
Yeah. Look, moving forward, our sort of plan is build as much properties as we can. So in the next year, we want to get to 50 properties. So that's 10 more in this year, by the end of this year, which can be done. Then after that, because I observe the market quite regularly, and I've seen it go up and down over a 25-year period, then at the right time, what I consider to be a right time, then we're probably going to sell down on half of our portfolio. And from my calculation, by doing that, I'll probably end up with $500,000. Yeah, $500,000 in passive income.
Nice.
And that's when we'll probably, take a year off, buy a caravan and travel around Australia, and probably do more traveling around the world. Yeah, and that's got to happen when our kids are in uni, obviously. So
Right. Okay.
it's
So
not
planning
it's not
ahead, I like it.
Yeah. So that's the plan anyway. And even when I'm traveling, as I said, I want to keep active. I want to still be able to invest as well. So for you to move around and be able to invest, I think shares, trading shares, options would probably be the way to go. Yeah.
And I think there's also opportunity. I mean, if we're going to be traveling a lot more,
Oh yeah,
we can actually pick up better deals, because when you're local, you kind of see things that you don't see. So
we'll definitely be looking at real estate when we're traveling. Yeah, make no mistake about that.
And I think the beauty about
I think the beauty
about being a buyer's agent is because you get to observe the market, and then you get to be in the market, and you get to do it with somebody else, and you get paid for it. That's the best thing. Yeah.
Yeah, and yeah, I think there's some numbers that you shared, kind of the compound growth of, and the importance of starting early with investing. I think you said first 10 years, got 7 properties, and then the next 10 years got 13 more properties.
Yep.
And then last 4 years bought 20, is that right? Something crazy.
Yes.
Yeah, well done.
Yes.
And then now 40 properties, and as you said, plans to buy even more. I
Yeah.
guess,
Look,
looking back to the kind of the first 10 years, like, could you have gone harder or, more aggressive with growing the portfolio? Was there anything that held you back?
basically, I was in my 20s. That's what held me back. Too much
Well, you
time
started at
partying.
24, right? So from 24 to 34,
Yeah.
looking back,
Too
was
much time
anything?
partying. Yeah, look, knowing what I know now, I would have probably bought more properties. Yeah. Especially knowing what I know now about the market cycles and when things peak and when things trough. I would definitely have, invested more time in properties.
Yeah. What about you,
Hindsight
AIlinh?
is always good.
Oh, I wish I started.
In your 20s and I guess
Oh,
early
20s.
30s? Yeah.
She was working 7 days a week.
I was working 7
Han
days
was
a week.
partying, AIlin's working.
Yes. So I was saving money. That's the issue.
Yeah.
I wish I actually did. I did have I actually did have a deposit. I did have a very good income at that time, but I just didn't get into property until I was 28.
Yes.
So I bought my first property when I was 28 when we got married.
Yeah.
So that did very well. And I think I was very lucky because I saw Han's portfolio and what he's done, and it got addictive because you can see the equity, you can see it grow. And
You know what made her addicted? Well, at that time when we were dating, right? She was working at Paddy's Market.
Oh gosh.
And at Paddy's Market, you get about $10 plus an hour. So she was working 10 hours, and by the end of the day, she got paid 100, 120. Right. So you know how I told you about that story where I went to Perth and I bought 4 properties and it made me 700,000. If you sort of work out the hourly rate of that, right? Just for argument's sake, I might have spent 60 hours in that week to look for properties, and I might have spent another 60 hours trying to, close the deal, talk to property managers, sort out maintenance issues. So I'd spend 120 hours to make 700,000. All right. Whereas for somebody who might not see the potential of investing and they're thinking, if I work a week and I make 2,000, that's all I can make, that's my limitation. But if you actually look into it, I was making $6,000 an hour by just going over to Perth and buying 4 properties and then just doing nothing really afterwards. Okay, compared to somebody who's making, whatever the wage is. Yeah. Yeah. So what were you saying? You were saying
I guess, I wish I did start earlier because I guess it just never occurred to me to invest because as you know, you never got taught that.
Yeah.
It's not something that you get taught in school or high school.
Yeah.
And I think even as adults, a lot of adults are still struggling at understanding all this. So
and once you saw the potential of
there's
the
a lot of
investing,
there's a lot.
We really got into it. Yeah.
And I think that's the reason why I fast forward now. I mean, the knowledge which I have now, if I've actually got that knowledge when I was in my 20s, I'll be making a lot more.
So finishing up, and I think you touched on as well, being a buyer's agent, very rewarding because you're passionate about property and get to do it as a job now for work. What were some of the challenges in growing the buyer's agency business?
Right. Growing, yeah. Now for us, when we started in the buyer's agent space, we had a lot of knowledge about properties, about finance, about accounting, about buying, about everything. Yeah. What we didn't have, was more of the sales skills. Yep. So how do we promote ourselves so that we can gain that trust from our clients. Yeah. So the first challenge for us was really just understanding how to sort of put through the message that we know what we're talking about. Okay. So I mean, for us, it wasn't growing the business. We wanted to grow organically. We weren't really into building $50 million business or hiring 10 or 20 people, because I think that's just gets out of hand sometimes. So for us, it's just, growing it organically. Okay. And then just,
I think it's also, how do you voice your understanding of what we know?
Yeah.
And that's where we had we didn't understand how to do that. And
Yeah.
and reading people, as a
Exactly.
buyer's
That's
agent, you have to
yeah.
read people very
Yeah.
well.
Yeah.
And I think as time came
You got to know
by,
their risk factors, their personality. Would they buy this property? Would they not buy this property? That's
what's their challenges? What are their thoughts? Why don't they like the property? Like, you've got to be like a counselor to them, as you know.
Yeah. And also explaining to them, look, you may see this, but this is what you should see. You got to cut out the emotional aspect of it. You got to see the number parts of it. But look, in terms of the buyer's agent space, I think there's a lot of buyer's agents out there now. Okay, there's a lot out there. So to differentiate yourself from other buyer's agent, I think that's the challenge. And if you want to grow, you've got to differentiate yourself. You got to offer that service, I guess.
And not just that, it's about understanding what the clients want. So every client's different, as you know. And the biggest challenge for us is each client comes up with an idea and they want this. But we've got to tell them this is not the right idea. This is what we do, and this is what. And so it's really trying to see if we're a good fit for them. And that's another challenge we have.
Yeah.
Trying to make sure that we are a good fit. You understand what we do, and we understand what you want. And once that kind of like once we find that out, I think it's easier in the business. Yes.
Yeah. Well, let's finish then on, I think you did mention one earlier, at a good case study of a client, I mean, could be a doctor, de-identified, or a healthcare professional that you've helped and how have you helped them on their property journey?
Yeah, I mean, we did have a doctor that we've bought 3 properties for, and I think he's very keen on building up a portfolio. He's one of the rare types as well. Now, I think the best case scenario, the best case study,
Yes,
was Helen, wasn't it?
Yeah, Helen.
Yeah. Now, with Helen, let's start off with Helen's partner first, okay? Because we bought a property for Helen's partner first. He, with some wrong advice, bought a 1-bedroom unit in Ashfield.
Off the plan.
Off the plan, probably about pre-GFC, pre-COVID. So
yep.
I don't know,
about
2019 roughly. Yeah. And because it's a 1-bedroom unit and because of all the strata fees, he was sort of negatively geared about 20K a year. Now his income wasn't high; it's probably about 60 or 70K income. So he's really struggling for the 4 or 5 years. And then he sort of came to us and said, what should we do? So we told him, look, sometimes you got to go 1 step backwards to go 2 steps forward. Okay. So this property, I don't see potential for it to grow that much over time, and it's costing you too much. Okay. So we advised that he sold the property. Then we got him into a property in Mandurah, which is WA. This was about a year and a half ago.
Yeah.
Okay. Now, so from that year and a half ago, we bought this property for him. He was a 2-bedder, and we also helped him convert that 2-bedder into a 3-bedder. Okay, so we did a bit of renovation. It cost him 15K. So the purchase price was, say, 340 roughly.
Somewhere there.
Yeah. Okay. So and fast forward, and so by you understand, by converting from a 2-bedder to 3-bedder, immediately you get that capital uplift.
Was it a simple conversion? Like just had to put a wall in internally?
You got to put 2.
15,000. Yeah. So all in 355,000. Yeah.
And that was also new flooring as well, and curtains and a couple
Bits
other
and
things
pieces,
as well. Yeah. So and from a 2-bedder to a 3-bedder, it can increase 50,000 in value. Okay, so there was good value already straight away after he
But
sort
the
of
rent
completed
also
it.
increased.
And the rent also increased. Okay, so fast forward to today, he would have made once again another 150.
About 150 for a year and a half.
Yeah,
And
about
because the rent
500,000.
is also increasing, is pretty much neutral as well. So going from a 1-bedroom unit that didn't grow in value and cost him in 20K, now he's got a house that's made 150 and pretty much cash neutral. Okay, and he's infinitely better off.
So he
So
went from one end of the stick to the other.
to the other, yeah. So therefore now he's introduced his partner to us, and we've helped her buy, that's Helen, buy her first investment property. And then she's very motivated. And then very soon after, we bought her second investment property. And I mean, she's a teacher, so she's not on high income or anything like that. But I think the difference for her is she had a goal, okay? And her goal, her aim is to be able to afford a property in Sydney and be able to sort of raise a family in Sydney with a house that they can own, okay? But so she realized that you can't save a deposit anymore, okay? Because the price of Sydney is always increasing. And to get into Sydney, you just don't have enough of a deposit, basically, okay? So the idea is really to invest your way there. So our sort of brief and our strategy then was to buy as many properties as you can in the next 5 years. So we've just recently topped up her property, which have increased in value, and we're able to now go to her 4th and her 5th.
Wow.
And then even her 6th property, okay? So once we establish that portfolio, then we just rest and wait for it to grow in value. And the idea then is to sort of sell out part of it, all of it, then to be able to get that deposit, that big lump sum of money, and come back and invest back in Sydney.
And I think the portfolio was pretty amazing because they've got 3 properties, and just in a year and a half, they've actually created an equity of 259,000.
Yeah, that's right.
So
Wow.
you think about how many years does it take you to save 259? There's no way you're going to be able to do that in a year.
Yep.
So for them, it was like, I can't believe I can go again. I can't believe I can actually do it again. I don't have enough savings, but they didn't realize it's not your savings what we're touching into, it's your equity, because it's their first time.
Yep.
So because this is the first time they've actually understood equity, and you can draw this out and then get a loan. And and between them two, I reckon within that 5 years, they should be able to aim for 7. So that's what our aim is for them.
Yeah.
Because they've got potential to do that, because their portfolio is pretty good. They live at home. I mean, they do have to do a bit of a sacrifice, which is living at home with their parents for now. And then
So they're younger, like in their 20s, all right?
Late 20s.
Late 20s, yes. And
maybe hitting 30, yeah.
Yes. So, but they've got the options to actually move out down the track.
Yeah, but that's what we're seeing nowadays. A lot of young people in their late 20s realizing that they can't afford in Sydney anymore. So we've helped quite a few sort of invest interstate. And then with the aim of eventually, coming back and be able to afford something in Sydney.
A lot of first-time investors, a lot of females, to be honest with you, who just realize that they cannot save fast enough, not for Sydney. They've been coming to us. So it's more like guiding them how to do this and how we can structure it right. And also just understanding that they can do it. Because a lot of time people think that you need a massive deposit. We're talking about $200,000-300,000 to be able to buy a property, but we're not aiming for things like that. We're aiming for things which is reasonable, maybe like 120, 130, which is reasonable. Yep. And you can get your first property, because saving your way is the harder way. But if you can actually put your money into a property, you're not just growing that $120,000 or $130,000. You're growing the whole portfolio. So people don't realize you're capitalizing on the total amount of the property.
Yeah, that's right. The power of leverage.
Yes.
And that's very inspiring. Kind of, as you said, I think, what did you say, in about a year and a bit, 3 properties, is that right?
3 properties.
3 properties, yeah.
250 in equity. Yes.
Yeah. Awesome.
Yeah.
Finally,
I think that the main thing with Helen is she had that goal. All right. She had a vague idea of what to do to get that goal, but she didn't know exactly all the steps, right? So you just need to know your end goal. You got to sort of begin with the end in mind. Then just, know 50%, 60%, and just get into it, right? You don't need to know 100% of how you're going to get there step by step. But as you go along, you find out new things and you find out new things and you realize, oh, I don't need to save up a deposit. I can use the equity here. Then you go ahead with that. And then before you know it, because you're taking baby steps, step at a time. Some people just analyze the whole thing and think, oh, this gets too hard. What am I going to do on my fifth property? But you haven't even got your first one yet. Okay. Or should I set up a trust, but you haven't got your first one yet? Okay. So go step by step, and along the journey, we'll sort of guide you in terms of what you need to do next. Okay. And it's because it becomes too overwhelming. And for some personality, they can't be too overwhelmed. So
I think the first thing is to take your first step and buy something.
Yeah.
But actually buy the right property, I should
By
say.
the way, don't buy off the plan units or house and land packages. Yeah.
Yeah, awesome. Great chat today. We covered, kind of getting your first property, growing to a 40 property portfolio, journey from, optometry to now buyer's agency business as well.
Yeah.
And thanks for sharing some of those amazing case studies. How can people find out more if they want to connect and learn more about what you guys do?
Cool. Look up our website, focusbuyersagent.com.au, or call our mobile number 0434 968 888.
Yeah.
And we can schedule a quick chat. The idea of a quick chat is really to see where you're at in your journey, what are your goals and your aims, and to see whether we're a good fit or whether we can help you along with that. Now, if you're if you're just starting out and you don't know what to do, we may point you towards the right steps. Say, your first person you should see is probably a broker. Okay, I've got a broker recommendation. Or, have you done your taxes yet? Okay, you still need your taxes. So go back to your accountant. So there are a lot of clients that are not quite ready, but at least they've taken up that first step, and at least they've spoken to us, and then now they've got the guidance. And when they're ready to buy with the pre-approval, then then we go and search for properties for them.
Yeah, awesome. And thanks again for coming onto the show, and to all our listeners.
Welcome.
Thank you again for tuning in to another episode of Passive Income Doctor. See you on the next one.